This is the Tan Talk Radio Network.
The opinions, thoughts, and observations on the IRS Solution Attorney radio show are not legal advice. Facts and circumstances differ in every case. Do not take anything said on the show as legal or accounting advice. Always consult your lawyer or accountant before deciding how to handle any legal issue.
Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome, welcome, welcome. This is the IRS Solution Attorney, Darrin T. Mish, and I'm here today with my co-host, Katrina Madewell. How you doing, Katrina?
Doing great. Ready for another several hours of radio this afternoon.
It seems like we were just here yesterday, but I guess it has been a week. I'm pretty excited about today's show. It's going to be something that can really help some people. We're going to talk about tax-related identity theft, and it seems like Florida and the Tampa Bay area in particular are the epicenter for this kind of thing across the United States. So we're known for a lot of things, but that's not one that I think we should be that proud of.
But Darrin, when I saw this come up, because, I don't even see the outlines till sometimes the day of, I'm like, oh my gosh, this is so perfect. Like, I could talk about this for 15 minutes, just things we've seen.
Right, exactly. It's becoming more and more common that people find out that they have IRS-related identity theft problems unexpectedly.
I know one we've seen, and it's kind of crazy, but Florida wasn't always this way, but it is now. The IRS Form 4506T, which allows, it used to be the lender to pull your tax return or verify your tax transcript was the same as you filed with the IRS as what you gave the lender. And they used to only do that in the event of a random audit. Like if your file got pulled, they'd pull the tax transcript to make sure you didn't add any zeros or change any numbers or anything like that. Well, now in Florida, like for every loan, if you're getting a mortgage, they're going to verify your tax transcript before you ever even get final approval. So this is where we see like the bomb drop sometimes, because we're like, what? There was a tax return filed. They have no idea. Like somebody got a refund, usually is what happens.
Yeah, it's really common in our practice too. It's even happened to employees of mine. Knock on wood. Thank God it hasn't happened to me yet. I just learned something today.
That is crazy. Imagine that, like somebody that works for an IRS attorney, their IRS return gets hacked.
Yeah, it's a real big headache in our practice because one of the things that we do when we get a power of attorney, which allows us to communicate with the IRS and represent taxpayers, is we will pull their account transcripts, much like you were talking about, but we use a special service that's kind of like we're part of the IRS computer system, so we can pull records and whatnot. And it's really a thorn in my side because those transcripts really tell me a lot. They verify and corroborate the taxpayer's story. They tell me what returns need to be filed and so on and so forth. But when there's an ID theft hold on the account, guess who can't get the transcripts? I can't get them.
Wow.
And so then it creates a big headache. Taxpayer has to go down to the IRS local office and ask for the transcripts for me, so that I can feel comfortable with whatever plan of action that I've decided to implement.
Because they have to actually prove who they are at that point, right? Yeah,
they have to show ID, and I think they might even have to show a couple forms of ID. There's another case that I have pending right now, or sort of interesting. Taxpayer was going to end up owing, or actually did already owe about $400,000.
Like from their real return?
Yeah, from their actual returns, from their actual high income, owed about $400,000. And somebody stole his name, his identity, tried to file a refund return, and guess what? That didn't work out too well for the fraudster because any refund, artificial or not, that was generated was going back to apply to the big debts that the taxpayer already had. That's typically kind of what I see. And so it doesn't work out real well for the fraudsters because that refund that they're trying to generate, that $9,000 or $12,000 refund or what have you, it doesn't appear because it got applied to the past.
Now, where are you seeing these people are at? Because, I know the ones, and you see this way more than me, I'm sure, but the ones that we've seen, they're several times they've been out of California. Are you seeing anything overseas?
You mean the people perpetrating the fraud?
Yeah, the people trying to commit the fraudulent return.
That's a good question. I never find out who it is.
Oh, you don't know?
I don't have any idea. I've actually had my identity stolen, but not related to tax. I've had people go out and in the past they would open up credit accounts in my name order the merchandise, have the merchandise delivered. And in my case, they had a bunch of merchandise computers, about $8,000 or $10,000 worth of computers delivered to the Bronx. At that point, I still have never even been to the Bronx. And I found out about it, and it was just a really big hassle to clean up and to prove that it wasn't me that opened the account. It wasn't me that got the merchandise. And I was already an attorney at that time. So I kind of knew what to do, sort of.
But you're like, what the heck?
Right. I bet you it took 40 hours to straighten out.
I'm sure.
I ended up calling the Hillsborough County Sheriff's Office, Tampa Police Department, the FBI, the Secret Service, and everybody just kind of shrugged and said, well, what do you want us? I even called NYPD. And they kind of just shrugged and said, well, what do you want us to do about it?
I mean, here's the problem. Like, here's what we've run into even with these scams. Like, you're here, they're there, so nobody wants to do it because they're like, not my jurisdiction, you're there. Well, it wasn't committed here. The people were in New York, not my jurisdiction. And they all kind of laugh you off, and you end up with the FBI, which that's a back burner little needle in a haystack.
Yeah, that's pretty much what the FBI and Secret Service told me. It was like, okay.
Good luck.
Yeah, we're not, this is an epidemic. And there's nothing we're going to do about it.
We do notice, like, when we pull credit reports to pre-approve people, one of the things we like to do is look over it with them because they'll show other addresses sometimes that they've never seen. And that's usually an idea that they may have an account.
Yeah, and I've seen a trend towards Hispanic surnames seem to be maybe a little bit more popular, at least in my experience. And common names seem to be somewhat more common in my experience.
And that could be mixed credit too. We've seen that a lot. Where it's just mixed, especially junior, senior. That happens all the time.
So let's talk about how you might find out that you're the victim of possible identity theft with regard to the IRS. One of the things that you might get is you might get an IRS notice or letter from the IRS saying that you filed more than one tax return. I'd say that's a pretty clear indication that there might be a problem.
Is that usually the first sign? They'll see something like that?
Yeah, a lot of times what will happen is somebody will be kind of late in that January to April tax season filing cycle, and they'll get a letter. They'll file, say they file on April 15th, and they'll get a letter back saying you filed duplicate tax returns.
Because, of course, the fraudsters filed in February, right?
Or January even.
Or January, oh, man.
Because the system's got some flaws in it, and one of those flaws is that the first person to file kind of gets precedence, because the IRS doesn't have enough fraud prevention factors in place to really prevent this from happening. It's interesting. I'm not really blaming the IRS. I mean, this is a big problem, and I'm not sure exactly what they should do about it. But good thing I'm not working for them because I would,
Well, I do know that, like, when you kind of trace it back to what's the root, like I've had a lot of clients over the years that, work at a hospital in the area. I won't even name them out. But what happens is their system ends up getting hacked into. And then so the people that were trying to buy a house that found out someone else filed a return, they either say, oh, no, this doesn't match because there was already a return filed. Other people at work will also have that. And then they realize later that the employer's system actually got hacked. So I know that there's a lot of steps going on right now on a legislative level to change all those things. Like our industry is being turned upside down in October, and a lot of that is protection from identity.
Yeah, I think the HIPAA laws and the healthcare also had a lot of protections in there.
It's like coming down on every level. So hopefully it will slow down a little.
Yeah, hopefully. Another thing that you can be aware of if you get a letter saying that you have additional tax, or if they took your refund and applied it to somewhere else, or if you have some kind of collection action that you're not aware of, that you should be aware of, that's an indication there could be an ID theft problem. And another one could be if there's IRS records indicating that you received wages from some place you never worked. That could be another big red flag. I mean, obviously, if there's a W-2 out there floating around from a job that you never had, that's probably a pretty clear indicator that somebody's trying to game the system and trying to generate a big refund.
So how and where would that even be? Like someone's completing a completely bogus W-2? So like the employer didn't even file that. This was just out of the, like, I went to Office Depot and bought a W-2 and now I'm going to file this return? Yeah,
that's what's going on right now. And, I forget how many taxpayers there are in America. There's about 100 million, I think. And so, I mean, it's a pretty big job.
So, I mean, you said even yourself as an attorney, it took you 40 hours at least to unwind, identity theft. What does someone do if they are a victim of this tax fraud and they get some of these notices?
Despite my story of complaining to every law enforcement agency I could think of. You really do. Step number one is you really do need to file a report with law enforcement. And the question becomes, well, which law enforcement agency is appropriate? And I would suggest that it's your local law enforcement. If you live in the county, it's going to be the sheriff's office. If you live in the city or a municipality, it's going to be the police department. They're not probably going to want to take the report, but you need to go down and you need to call and you need to make those reports. A lot of times I think those types of reports now are being taken over the phone by non-sworn officers, so it's not really a huge burden to law enforcement.
It's kind of almost just a matter of putting it on record, wouldn't you say? That's what that's about?
Yeah, it's funny. I actually have a friend who's a TPD detective, and he works in auto theft primarily, and they're even running across this. There's a funny story going around, and one of the reasons it's kind of the prime story for Tampa being the epicenter of tax-related ID theft. There was a guy that was living in the ghetto, and they kept noticing him because he was living a very flashy lifestyle. He obviously had a lot of cash, and they couldn't figure out what the deal was because they had him under surveillance. They couldn't find him doing anything illegal, but he just really seemed really out of place. And one of the indicators was he had a car that he had actually chromed. He chromed the entire car, and so that cost a lot of money. And so ultimately what happened is they ended up doing like a traffic stop on him, and they found hundreds of Social Security cards, like a high volume of refund checks and whatnot. And that's how they found out that, hey, this guy, he's not dealing drugs, he's not dealing in stolen property or whatever, he's actually doing this IRS theft.
He's dealing identity theft. That's what he's dealing.
And they ultimately reported it to the IRS, and the IRS was kind of like not too cooperative. I mean, the IRS just kind of didn't know what to do with it. And ultimately, I think he was prosecuted, but I can remember local law enforcement telling me they felt really frustrated about it because, there was this theft going on at this really grand scale, hundreds of millions of dollars, and even they were having a hard time getting anybody to do anything about it.
It's kind of like one of those, like, it's out of my jurisdiction, not me, everybody's pointing, and you're like, okay, where does this go? You know, it's like the homeless item in your house.
Yeah, so step number 2 is going to be you're going to need to report the identity theft at ftc.gov. That's a website. That's ftc.gov. And you can also learn additional ways to deal with identity theft at identitytheft.gov. So you're going to want to report it to ftc.gov. And that's probably not going to help in your individual case, but it's going to help in the bigger scheme of things so the government can try to help deal with the situation. They can understand the scope and magnitude. So that's a suggestion. The next suggestion would be you need to contact at least one of the major credit bureaus and put a fraud alert on your credit
I'd say all of them.
Yeah, I would too, but at least one would be a really good idea. And then you're going to want to go ahead and contact your financial institutions, your banks and whatnot, and close any accounts that were opened without your permission or
the fraud alert. Let's talk about that too, because that can kind of be a pain, especially and we've seen this where people actually go to purchase a home or something and they have to what they call unfreeze their credit report so that we can actually pull it.
Yeah, for sure. I actually, as a result of my own identity theft problem, I started using a service, and I'm not gonna tout the name of the service, but it's a service that costs about $25 or $30 a month. And what it allows me to do is it allows me to get instant alerts anytime any accounts are open, anytime there's any kind of credit bureau is pulled, credit report is pulled, and it also gives me free on-demand credit reports as often as I like without dinging my credit score. And so that's a pretty good solution. There's one called LifeLock. I've not had any dealings with them, but they advertise on the radio a whole lot.
There's usually type of insurance type of stuff where they'll pay if you actually have identity theft to unwind it. But annualcreditreport.com, that one's free, and you can get it from all 3 credit bureaus. Everyone's entitled to that at least once a year.
So that's good.
It's completely free.
And really everybody should check their credit report at least on an annual basis because even if you're not a victim of identity theft, sometimes weird things just show up by mistake on your credit report.
I check mine at least quarterly. I mean, it's pretty easy for somebody like me to do. We just pull, try merge, and see what's on there.
I'm obsessive compulsive about it. I pull it like once a month, twice a month. But
Thank God you're not pulling the real report. You have like 1 million inquiries on there.
But I'm also experimenting with different ways to increase your credit score and things like that because I'm a geek like that in terms of systems. I like to see how things work. And,
we actually have a back-end system called a Whatif simulator, and that's what we do. We play with that to see, like, if we need a certain number of points on a score to get somebody a loan, we'll play with it. Take the balances up, down, open credit, increase the lines, all that kind of stuff, and it'll tell us roughly how many possible points we can get, and it's pretty accurate.
I would think that in your business, as a real estate professional, that would be really helpful, because I'm sure there's people that try to buy homes that don't have the credit right now, the credit score.
We have one right now. Literally, the guy put balance on a credit line, and it dropped his score by 1 point to throw him out of the program. And there's just no exception on these things. I mean, since the housing collapse and the meltdown, the loan's not saleable. So it's non-negotiable. It's not like the good old days where if you had a good rapport with the underwriter, you could just get that 1 point exception. As soon as that new mortgage loan reports, you're good to go. It's just we're not in those days anymore, unfortunately.
Yeah, that's too bad. I've heard that those things are starting to loosen up maybe a little bit, but yeah, definitely. I think there was a big pendulum swing after the real estate crash, and underwriting, perhaps, in my opinion, went a little bit too far in the strictest.
They did. They're still too tight, and I don't, those, we've seen it loosen some, and it probably will continue to loosen a little more. It will never, ever, ever be as loose as it was, which it shouldn't be. It was way too loose.
Agreed.
But on the same token, I think it's always going to be a little tighter than it should be.
So we talked about checking your credit report at least annually to try to prevent and reduce your risk. One of the other things, it's pretty obvious, but a lot of people don't think about this, is don't carry your Social Security card in your wallet or on your person regularly.
I can't tell you the people that literally, like, will have a new hire and they just pull their Social Security card out because they always carry it. And you don't need that ever. Like, unless you're buying a house and they ask you for a second form of ID or getting a new job.
Yeah, I think, day one of your new job, I just hired somebody and I told them, on Monday, bring your identity documents because I need it for the I-9, although I'm not sure that even matters anymore. But
I can't think of any other time you would need to carry it around with you.
Exactly. So don't carry it around with you, because that's real obvious. I mean, if you lose your wallet and your driver's license and your Social Security card are in there, I think you might be in a little bit of trouble there.
That's all they need. I mean, really, to pull a credit report and to do identity theft, you need name, address, date of birth, all on the license, Social Security number, bam.
God forbid.
I can't tell you how many accounts someone can open and pull credit with just that information.
God forbid they have mother's maiden name. Then you're really dead, I think.
I mean, really, we don't even need that. Like, for date of birth, it's address, name, Social Security number, date of birth. That's it.
It's scary. We're going to have to, as a society, we're going to have to come up with some kind of safeguard. Maybe it's biometrics, maybe it's fingerprints. I don't know, but this is not working clearly.
I think everything's moving that way, and hopefully the IRS also has to, take some precaution for this kind of stuff. I think they should be required to do it. So when these refunds go in, like if your regular banking information has changed or it's different, you should have to go through a little bit more red tape. I think that might avoid that, don't you?
Yeah, but then there's the other concern would be it's kind of big brotherish.
They already got it anyway. You know that.
Do they have your retina scan?
I think they got it.
Your fingerprint?
I think they got it all.
They certainly have my fingerprints.
It's not like they don't know who you bank with. I mean, how many times do you see they go in and swoop or levy or all those fancy IRS attorney words with the bank accounts, right? They just take what they want. They know where you bank. They got it.
So the next thing that you should do to reduce your risk is, lots of times businesses that you're doing business with will just routinely ask you for your Social Security number, and you don't need to give them to them. There's very rare instances where a legitimate business needs your Social Security number, so try not to give out your Social Security number whenever possible.
Now, do you ever see this with EINs, which are kind of like a business Social Security number? You ever see that?
Personally, I'm not as worried about the EIN. I do tend to protect it, but there's not nearly as many things you can do with the EIN and the name of the business and the address of the business. I think even for applying for business credit, you still need a Social Security number. You need a human, right, for the most part. So I don't worry about that too much, but I also don't think I'd be bandying that about,
Right.
I don't think I'd put it on my website or anything.
I've seen people just dish it out like candy. It's like, whoa, that's like a Social Security number for your business.
The next thing on my list here is, protect your personal financial information at home even and on your computer. So just make sure it's secure. This is common sense. Just don't leave it lying around.
Oh my gosh, it's a big one. I can't tell you the times we go in to list a property and I have to say, put all that mail away. Like, seriously, you have credit cards and bank information, because I still get mail. And, guns, jewelry, all that crazy stuff. Identity, huge.
There could be cleaning crews at your home or at your business. You got to be I'm not saying you should be distrustful, but
it could be anybody. You don't even think about it. It could be someone there to do a repair on your house.
You just have to use common sense. The next one is, you get a Social Security Administration earnings statement every year. And a lot of us just look at it and we look at, well, how much are we going to get when we retire? And then you laugh because it's such a small amount and you kind of toss it away. Make sure that earnings statement looks to be accurate. If there's extra earnings on there, you might think that's cool and that's going to help you in the long run, but I would suggest that's probably not a good idea. If you notice that the earnings statement is not accurate, you're going to want to go ahead and get that fixed.
I never even thought about that one. Like, now I'm going to check it.
Yeah.
Because I rarely look at it. I toss over and I throw out my magic blue envelope and I'm done.
You learn things on the show.
I do, every week.
Protect your personal computers by using firewalls, antivirus software. Make sure that you do those annoying Windows security updates and patches. Make sure that you do all that stuff because it's going to keep your computer more secure. I mean, nowadays almost everything about our life is on a computer someplace. So make sure that you protect that stuff because it's very valuable and it's a huge headache, as the story I told.
And your internet too, your Wi-Fi. I mean, even though those super long, obnoxious, annoying 2 million letter long passwords are annoying, they're safe.
Yeah, that keeps you safe from the people just driving through your neighborhood.
Correct.
What do they call that again? It's got an interesting name.
It does have a real name, and I can't think of what it is.
It's like,
Ed, what is it called?
It's like skyjacking or something like that.
It's something where they just literally drive through, look for open Wi-Fi signals or easy ones to hack, and they basically just swoop in there and get access to any personal information.
I think I liked the old days better, where you just had an open Wi-Fi account at your house and you didn't have to worry about it. But now there's just so much potential liability. I mean, can you imagine somebody, if you left your Wi-Fi open and then somebody just driving by started doing inappropriate things through your Wi-Fi account?
Oh my gosh, I can't even imagine.
And it gets traced back to you.
Stuff you don't even think about. Like, what if they're looking at porn or whatever, and then, like you say, it gets traced back to you? It's insane.
Yeah, it could be devastating.
But, I mean, the good people never even think about that stuff,
Yeah, and I think that we all as a society need to be just a little bit more careful and a little bit less trusting. We don't have to be paranoid, but you just have to make sure that you protect yourself from these people. But there's one last thing that I wanted to talk about. Actually, there's two things. One is there's the IRS for the state of Florida, Georgia, and D.C. is offering something called an identity protection number. And so this is an additional number, kind of like we were talking about just now. We wish there was a way to protect yourself, and you can. This is a proactive step that you can take. You can go to their website at irs.gov/getanipin. So that's GETANIPPIN, get an IPIN, to register. And they'll give you, actually, after they verify your identity, they'll give you an extra number that you can place on your tax returns. And you can use that, and that will verify that that's you. So from that point forward, no one will be able to file a return in your name without having that extra IPIN. So that's kind of cool.
That is awesome. I didn't even know you could do that yet. One more thing learned. Ding, 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 ding.
Yeah, so I would suggest that everybody do that because it's going to keep these identity theft problems from happening. But there's one other thing I wanted to mention, and this has actually happened to me, and it's happened to a number of my clients, and that is you'll get this phone call, usually a voicemail at the house, and it's from someone with an East Indian accent, and they'll start saying they're from the IRS, and there's going to be a lawsuit, and unless you call them back or if you give them money, then you can make the lawsuit go away. It actually happened to me. My wife called me. I was driving down to South Florida for business, and she was all shook up. And we've been doing this business for over 16 years. And she told me that, there's somebody from the IRS, and they're making threats and whatnot. And I had her describe the call, and I laughed and laughed and laughed. And then another day, I was at home alone on a Saturday morning, and I got the call, and I had a great time talking to the guy about all the things he was going to do. And he was from the IRS, and it was just a lot of fun. But those calls are fraudulent. They're bogus. You don't have to worry about them. You just need to hang up on them.
Anytime you don't call them, don't give them any info.
I think that's very good advice.
We'll take a real quick break. We're at the bottom of the hour. You're listening to the IRS Solution Attorney Show. We'll be back in a minute.
This is the Tan Talk Radio Network.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775. Hi, I'm Katrina Madewell, host of Tampa Home Talk. I'm going to give you market-appropriate, timely information regarding homeownership matters, because we want to make your everyday life better. Wherever you are in life, it's our mission to bring you good advice so you can maintain good credit, live within your means, and build wealth. My team and I are passionate about it. Love where you live, or I'll fix it.
Tampa Home Talk on WTAN every Thursday and Saturday at 5 p.m.
This is the Tan Talk Radio Network.
Welcome back. You're listening to the IRS Solution Attorney Show. I'm your co-host, Katrina Madewell.
And I'm the IRS Solution Attorney, Darrin Mish.
So we can take some of your questions. We are live today, as usual, on Thursday afternoons at 1. Studio call-in line 727-441-3000. We can also take them via Twitter. Call-in number 727-441-3000. Twitter handle
is Darrin_Mish. That's DARRIN_MISH. Love Twitter questions for sure.
And again, that's at Darrin, DARRIN
_MISH.
Don't forget 2 I's there. First name, last name, easy, right?
Yeah, exactly.
We did get a question from Lisa on Twitter. She wants to know, what are the chances of being audited by the IRS?
Well,
that's a loaded question.
The very good news is not very high likelihood you're going to be audited. So if you're an individual taxpayer, I'm going to assume that you are, Lisa, your chance of being audited if your income is under $100,000 is about 0.9 of 1%. So less than 1%. It goes up to about 1.5% if your income is under $200,000, and it goes up to, I don't know, maybe 2% if you're earning between $200,000 and $1 million. If you're over $1 million, it goes up again.
You're just going to get audited every year. I'm just kidding.
But it's not that high. That's the great thing. There are some schedules and types of tax forms that are actually have a higher audit rate than others, and that's kind of important to know. You know, if you just start doing business and you don't incorporate or you don't form an LLC, you're actually known as a sole proprietorship. And if you're a sole proprietorship, then you're going to file a form called a Schedule C, where all your gross business income is reported and your business deductions are reported. It's important to note that that is one of the very highest schedules that's audited. So if you have a Schedule C, your audit rate goes up quite a bit. It goes up to maybe 3 to 5%. And that's because people who are doing business as a sole proprietor are, by definition, unsophisticated, and the IRS feels more likely to overstate their deductions or understate their income. So those Schedule Cs get audited more often.
Which kind of leads into another question that we had. Rick wanted to know if there's certain activities that actually raise red flags to trigger an audit from the IRS.
You know, what we're seeing right now a lot is people claiming unreimbursed employee business expenses. So let me explain what that is. That sounds like a complicated thing. It's when an employee claims that their employer is not reimbursing them for business expenses, like mileage, for example. You know, you're not an employee and you probably drive all over the place, but
I get my 3,000 miles a month times whatever that rate is.
Yeah. So, but you're probably a Schedule C, or you might have a corporation, and so you can deduct those miles. But if you had a job and you were getting a W-2, and the odds are very overwhelming that your employer would be compensating you for that mileage in some way, and so you can't double dip. You can't claim. You can't get.
Two people can't get it.
You can't get reimbursed by your employer and then write it off, and we see that an awful lot. I mean, unreimbursed.
Which because their employer's taking the deduction at that point because they're paying for it.
Exactly. And so I don't know exactly why, but in the last couple of weeks, I've seen, I don't know, a half a dozen of these audits come through where you have unreimbursed employee business expenses, and that's just not something that I would recommend claiming. There's another red flag that I see a lot, and that is not a real big fan of the home office deduction either. I see an awful lot of home office deductions being audited, and
I'd heard that too a lot, and I just never took it just for that reason, even though I do have it.
I'm actually entitled to take it, and I do not take it. It's just not
worth it.
It's just not worth the potential hassle. There are some other things like failing. This is really obvious, but I see people violate it all the time, and that's failing to report all your taxable income. So a lot of people will, air quotes, forget to put a 1099 on their tax return. Well, the 1099 exists so that the government knows about that income. If you forget to put it on your tax return, you're going to have some kind of an audit, because the computer at the IRS is going to match up the income to your tax return. It's not going to match, and there's going to be a problem.
How do freelancers fit in that mix?
Well, you know, freelancers tend to get 1099s, right? So, and sometimes this is completely innocent. Maybe a freelancer does work for 9 different, contractors.
There's a lot of services too that they connect freelancers, and there's not really anybody responsible because it's going through a company.
Right. So, but let's just say in my example, they work for 9 different companies, and they only get 8 of the 1099s, and they're not terribly organized, and so they literally forgot or didn't get the 1099. They're going to get audited. It might not be a real high level audit, but there's going to be an adjustment at some point to take into account that extra income for sure.
And after 9, I mean, that would be easy to miss if you're already counting 8 1099s.
There's lots of kinds of contractors that get that many 1099s. You know, a lot of times in the construction trades, they might work for more than one GC. You know, if you're a framer, you're just going to go and do all the framing work you can find.
What's that number? Isn't it like up to $500 they don't get a 1099 or something?
It's $600.
$600.
That number hasn't changed in like 3 decades, but anyway.
I think I might remember that after now, since it's been 30 years. So what happens if you actually do get called for an IRS audit? Like, I would be so scared. I've never been audited, but I know I would call you first. I know I would do that just because I can reach you and I'd be like, what do I do? But what happens if someone gets called for an audit? It's going to be a letter, right? First things first?
Yeah, you're usually going to get we call them a love letter. You're going to get a letter from the IRS, and you're going to see the return address on the envelope, and then your heart's going to skip a beat, and then hopefully you open the letter and you see that it's an audit, and that's not a good thing. But I'd say the best thing to do is you need to read the letter. You need to understand what the scope of the audit is. I've actually been audited.
They'll tell you why they're auditing you?
Yeah, they will. They'll usually tell you what the problem is, and so oftentimes those audit letters will be limited in scope. I've been audited but a couple times, but it's just been on very, very minor issues. I think one time we had the Social Security number wrong for one of my very young children, and so that's technically an audit. That was one of those times when we actually got the Social Security card out of the safe
and verified it.
We copied it and we sent it back to the IRS, and that's so that we cleaned that up. But that's called a correspondence audit. Correspondence audits are usually pretty limited in scope, really not that huge a deal. Probably a good idea to get some help from an attorney or an accountant or somebody.
Is that kind of like verified piece of information?
You typically, and that'll often come out on a letter called a CP 2000. You get a CP 2000, it's technically an audit. It's not the end of the world. It's just some problem that needs to be fixed. Oftentimes it's biographical kind of problem, Social Security number or potentially unreported income.
Now, would they usually say, I'm going to audit you for last year? Or they're like, boom, 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 pulling out all the stops. I'm auditing you for 3 years. Like, what do you usually see?
What usually happens is they say, we want to do a face-to-face audit for tax year 2013. And then after you go and you deal with 2013, and if they see any problems, significant problems, then they're going to say, well, guess what? We're going to open it to 14. We're going to open it up to 12. We're going to do all 3 of these years. And
so do they just roll in unannounced, or they have to make an appointment with you, or what?
No, they definitely make an appointment. What they do is they send you an audit letter, and they say, congratulations, your audit is scheduled for such day and time.
Woohoo, you won!
And typically, if you get professional representation, and I do recommend that you get some professional representation. Then that representative will call and typically rearrange the time and date and get a little bit more time to be more ready. I do recommend having somebody go to the audit instead of you, and here's why. This is very common sense.
So don't go at all, you're saying send someone else?
I would say send someone else, and this is very common sense, and it'll make sense to you. And that is, your initial reaction as the taxpayer, and it would be mine, despite everything I know, is going to be that when they ask you a question, you want to show that you're as compliant and as cooperative as you possibly can be. And you're going to be under stress. And what you do when you're under stress like that is you blurt out things that are inaccurate. And that's bad. So you don't want to be doing that. You want somebody to go down there that's more objective, more disinterested. And quite frankly, at audits, I will often not know the answers to the questions that are being asked. And I like it that way because then I write down the questions, and then I get about a week to answer them. Then I call back my client, and I say, okay, here's the questions that we need answers to. What are the answers? What are the correct answers? Not what are the emotional, on the spot, right there in the audit, when your blood pressure is, 180 over 2,000, and you're freaking out. I would suggest that you just you hire somebody else to go handle the audit and take care of it that way.
Typically, would your CPA, your accountant work collaboratively with you to do that audit since they filed the return?
It can often be a very bad idea to have the preparer handle the audit. And here's why. The return preparer is often more concerned that they made a mistake than they are for preventing you from owing more money. And so they end up having split loyalties. Their loyalty, they can't help it. Their loyalty is to save their own skin, and your secondary is the client. That might sound harsh, what I'm saying right here, but it's just human nature,
And they're very detail-oriented people typically in the accountant field. I mean, they have certain personality style to crunch numbers all day long. They do. I'm just saying, and
Not to stereotype anybody.
I mean, no, I'm not stereotyping them. I've met some that have amazing personalities, but for the most part, like if you're familiar with the DISC personality profile, your accountants are going to be your C's. They're number crunchers. They're bean counters. They have that personality.
Yeah, and stereotypically, they're going to have they're not going to be real effective communicators typically, and so I just don't recommend usually having the preparer handle the audit unless it's something very routine, like we just discussed. A missing social
and that
security
makes
number.
sense too. And you have people like me, like my returns might be jacked up compared to some people, because my business plan and the way I do things is different. But I can explain that and why I think those are tax deductible items, why they are. Right?
Yeah,
I mean,
exactly.
If I'm spending money to make money, that's a tax deduction, right?
Yeah, and as long as it's ordinary and necessary and reasonable, you're not going to have a problem. But you're right. I mean, for sure, everybody's returns are different. And there was a study out one time where the IRS actually gave the same fact pattern to 50 different tax preparers, and they got 50 different answers on the returns. So this is more like an art instead of a science.
So what do you mean exactly? Like, explain that a little more, because that just went whew. So I'm sure for the person listening, they're going, what the heck did he just say?
So we like to think of accounting and tax preparation as something that's just real black and white, and accountants tend to think of it that way. But in this study, the IRS gave the same fact pattern to 50 different tax preparers, and they got 50 different tax returns back.
And the fact pattern is?
I don't remember. It was of moderate complexity. It was a business owner with this much gross income, this much expenses, that kind of thing.
Okay, so this scenario.
And they got back 50 different answers. And not all 50 of those were wrong, which is sort of interesting. I forget the exact stat, but more than half of them were correct, air quotes, correct. But different answers.
That falls into that reasonable, ordinary, necessary, whatever.
Yeah, so, I don't know that taking your tax preparer and having them defend the audit is necessarily the best thing. It might, at the very least, you should get a second opinion on that, because there is no privilege between a tax preparer, even an attorney tax preparer, and their client. So there is no privilege there, and so that tax preparer could technically be considered a witness against you. I don't think that's the right person to have you represent you in an audit. I'm sure there's reasonable people that could disagree with me on that point, but
it just seems like some separation in that area in the middle of something like an audit would be a good thing.
And I'm often asked, what's the difference between having my accountant handle my tax problem versus an attorney handling my tax problem? And my standard answer is this: accountants and attorneys are trained dramatically differently. Okay. Accountants are taught that everything is black and white, 5 + 5 = 10, 100% of the time. And although I tend to agree with that, if you ask a good attorney what 5 + 5 is, the answer is going to be, well, what do you need it to be? You
can argue that point.
Exactly. And so we're trained as attorneys to be advocates. We're trained to be zealous advocates. I mean, that's why sometimes people call us hired guns. It's in our oath of attorney that we have to be a zealous advocate for our client. And so we tend to think in shades of gray. Me in particular, I tend to think in shades of gray. I want to identify what a win is for a client, and then I want to do everything in my power to get that win for the client, of course, lawfully, ethically, morally, all
but
those
that's
things.
a matter of also seeing, like, hey, what's my point of view, and why did I have this, and why would you argue that point to be correct? Because that's the way I filed my return.
And, lawyers, good lawyers, experienced lawyers, we've been in the trenches, in my case, for over 20 years, versus accountants tend to be less adversarial, and they don't fight for a living. And so it's a different sort of mindset. I'm not saying anything bad about accountants. I love accountants.
But it's a compliant type of personality, and like their job when they get up to go to work, I almost see like this automated clock, ding, next day clock, ding. And then like somebody like you or I, like Monday is going to be totally different than Friday. Like it's just not going to be the same day.
That's true. And they often seem to be really concerned about offending somebody at the IRS or making enemies at the IRS or things like that. And I think that makes sense. If you're not trained in this, if you're not experienced in this, if you don't know how to conduct a civil dispute, administratively at the IRS, I think that could be a really real concern. I don't think it's necessary, but I think they're worried about it. So since I've been fighting the IRS in a semi-nice way for 16 years, I'm not that worried about it.
One of your headlines you have on here, which I think is so interesting, we probably should make sure we touch on. It says the IRS fails to protect taxpayers' privacy from hacker thieves and property seizures.
It's kind of an interesting story. It comes out of the Washington Times on September 6th. And what it is when the IRS can't collect from a taxpayer, sometimes they're reduced to conducting seizures of personal property. Sometimes real property meaning real estate. In this case, what was happening is the IRS, there was an internal inspector general probe at the IRS where they determined that quite often, as much as 30% of the time when the IRS seizes a vehicle, they don't actually wipe the GPS data out of the navigation system, and or they leave the garage door opener in the vehicle. So let's think about this. You're already having a really bad day because they seized your vehicle to sell at auction. And then the person who bought the vehicle potentially could drive right to your house.
They punched in home on the GPS.
They punched in home on the GPS, and then the garage door opener is still in the car. So now they have access to at least the garage of your house. And so it's kind of a problem. And the IRS says that they're trying to work on it. But I thought it was an interesting story just from the standpoint of, they managed to wipe some servers over at the IRS to protect their own security accidentally. But
of course,
somehow they can't remember to take and wipe the GPS data out of the nav systems from cars that they seize. And
that's exactly why. Like I have a home button plugged into my GPS, but I can tell you, I don't know what address is in there, but it's not mine. So good luck. You can go there, but it's not going to be my house.
Interesting. There was another interesting point in this story, and that was that in fiscal year 2014, they only collected $22 million from the seizure of, personal property. I think that's a remarkably low number.
Sounds low.
It just doesn't seem like that high a number for as much trouble as it is. And I think it's because they do these auctions that aren't really all that well publicized, and then they sell the property at auction to a limited audience, and I think they don't really get market value for it or anything close to market value.
Probably like their cousin.
I don't think that's the case. I think they are publicly
I'm just being funny.
noticed. You can actually, if you're interested in buying property from IRS auctions, you can Google it. There's a mailing list that you can get on, and you can apparently get some pretty good deals.
Wow. What about this bent plumber that had $1.6 million in tax evasion?
This is kind of interesting. This is a guy out of Bend, Oregon. He was running a plumbing business. I'm not sure how big. It must have been pretty big because over
1.6 million.
over 4 years, he managed to rack up $1.6 million in taxes that or income that he evaded, and taxes that he didn't pay. And he's in big trouble. He's going to be looking at a maximum fine of 3 years in prison and $100,000 a fine, plus the restitution of the tax that he didn't pay. So his life is probably not looking too great for the next few years.
We covered a lot of awesome stuff here today. If you missed any part of the show, you can catch it in its entirety on the podcast. And you guys are posting all your stuff over at getirshelp.com, right?
We're putting it on getirshelp.com.
So if you want to read the whole story.
And the IRSsolutionattorney.com is another place where you can get the recordings of these shows.
That's really good to have that information because sometimes we touch on them, but we don't get a chance to share everything. So I'm glad you're posting it over there at getirshelp.com.
Absolutely.
It's time for the train wreck of the week.
Yeah, the train wreck this week is kind of an interesting story. Gentleman came into my office, and he was a truck driver. And truck drivers, independent owner-operators, have interesting lives. They bring in a lot of money because they get paid on the gross, right? I mean, they get paid X amount to haul freight from point A to point B, but then they have to take out all of their expenses, their fuel, their insurance, the truck payments, the tolls, the fines, all that stuff they have to take out. And it was interesting in this case, when this gentleman first came to me, he came because he had a payor that had issued him duplicate 1099s.
Ooh, so exact same thing?
So they were like $75 apart.
Ouch.
So one was like for $100,000 and one was for like $100,075. So he came to me and he said, here's the problem. These are obviously duplicates. And I looked at him and I said, yeah, obviously what happened is they issued the first one, the lower amount, and then they found $75 more and they issued the second one and they didn't cancel the first one. And we tried to get the payor to cancel it, but they wouldn't. They said that they had done everything they could do. And so what we did is we ended up filing a tax court petition. And it was a pretty interesting case.
What is that called again?
It's a tax court petition. What happens is when the public thinks that the IRS can just invent tax and assess it against you at any point in time. But they really can't. They have to follow what we call due process because of this thing we call the Constitution. They have to follow due process.
That little thing.
So they have to follow certain rules. And so what happened in this case was when the duplicate 1099 was issued, they issued him what's called a notice of deficiency. It comes in the mail. And when you get a notice of deficiency, you have 90 days to file a tax court petition. Now, you only have 90 days. You don't have 92 days. You don't have 91 days. You have 90 days. If you file this tax court petition late, you lose. It's untimely. No person on earth has a jurisdiction to extend this 90-day deadline. So it's really important if you get a notice of deficiency and you want to file a tax court petition, you got to do it on time. It's got to be mailed within the 90 days. The deadline will be on the sheet in big red letters typically to tell you what your deadline is. So we filed a tax court petition, and this case was awesome. I never had this happen. I filed the petition, and I didn't even have to have a conversation with the IRS or counsel. They just saw it my way, and fairly immediately for this kind of process, they just fixed it, and we were back on our way. Now, that's not the cool part of the case. I mean, that was cool. I liked that part of the case. But my client still owed about $50,000, and it just went under recommendation this week from the IRS that looks like they're gonna accept about $1,400, a little under $1,500 on that case. So went from potentially owing well over $100,000 to about $1,500.
So was that money he actually owed, or
he actually owed about $50,000, separate and independent of my story with the duplicate 1099. So we got him up to date with his filing requirements. We got him up to date to making his estimated tax payments like he's supposed to do. And then we demonstrated successfully to the IRS that he really could not afford to pay any more than about $1,500. So very happy client. I know that he's very much looking forward to putting this behind him. You know, one of the things that happens with these independent, self-employed kind of people is they don't understand the concept of how they're supposed to stay out of tax problems. And the way you do that is by making estimated tax payments. Estimated tax payments are supposed to be made at a minimum quarterly, but I typically advise my clients to pay them either weekly or monthly so that you just can't fall behind.
Whenever you pay yourself or write that check, go ahead and make that tax payment.
Yeah, if you're a real estate...
the best way to stay out of the hot seat.
If you're a realtor, I suggest that you pay your estimated tax payments at the closing table, essentially. Take your percentage out right then and there and send it to the IRS. And that way you can't, quote unquote, borrow it for some, emergency that you have that comes up. I mean, everybody has financial emergencies, and just don't borrow the money from the IRS. For goodness sakes, borrow it from somewhere else or go without.
Not them. But don't let the IRS bully you either. So,
absolutely.
When you get these letters, don't be afraid. You can call Darrin. You can reach out to him at www.getirshelp.com.
Or our phone number is 813-229-7100.
Isn't your number spelled like Get Mish?
Our toll-free number is 888-GET-MISH. That's 888-GET-MISH, 888-438-6474. Love to talk to you. Love to help you if you have tax problems.
A little one or a big one. Knock those big ones out of the park. I love those stories.
If you owe $20,000 or more, then certainly it's going to make sense to have a conversation with me. If you owe $7,000, probably not so much.
So what's the best thing for someone that owes $7,000? Call the IRS, try to work something out?
Yeah, if you're going to owe $7,000, just as in our hypothetical example, you're probably going to qualify for a very low installment agreement. You don't need an attorney for that. You're going to basically take your $7,000, divide it by 60 months, and that's pretty much the installment payment that they're going to accept.
That's a repayment plan, usually over 5 years?
Between 60 and 72 months is usually how it's going to work out. So if you have those low dollar amounts, there's oftentimes not much I can do. If you owe $7,000 and you make $100,000 a year, I'm not going to be able to do an offer and compromise and demonstrate you can't pay back $7,000 over 10 years. That's just not going to work out.
What's the wipeout period that you talk about, too? Is an actual name for that, where it goes away?
There's a collection statute of limitations.
Statute of limitations, love it.
And we talk about that on the show sometimes. That is, the IRS has 10 years from the date the tax is assessed to collect the tax. If they don't collect that money within 10 years, then taxpayer wins, IRS loses.
Too bad, so sad.
Yeah, there are exceptions, of course, but for the most part, that's the rule. If you get by with 10 years, you win.
I love it. It might work out nicely for someone. For
it
sure.
does. It works out. We have clients every year that end up having the statute blow, and that's what we call it, and they walk away from a lot of money. In fact, I just worked out an installment agreement. The paperwork went through today. He owes only about $28,000. Put him on a $500 a month installment agreement, but more than half of that money is going to expire in like 18 months. So in 18 months, he's going to have, half of that's going to be gone, and he'll be a lot better off.
And you guys have a ton of resources on your website just for someone to tool around.
Absolutely. I think there's a couple hundred videos on there. If you have any particular questions about IRS problems or how to handle them, then you're going to want to visit the website at getirshelp.com.
And you guys are posting the podcasts over there as well?
Podcasts are there. They're on the IRSSolutionAttorney.com website, and they're also on iTunes.
If you're just catching us for the first time this week, we'll be back here same time, same place every week. This is the IRS Attorney Solution Show. The whole show's on a podcast, and today's episode was what is tax-related identity theft and more.
Thanks for visiting. I'm Darrin Mish with Katrina Madewell.
Thanks so much for joining us this week. We'll be back. Same time, same place next week.